Dear participants, welcome to the 5 days online course on futuristic accounting, which is organized by Indian Academic Researchers Association in associate with Indian Accounting Association Tiruchirappalli. I am Dr. S. Kala, Assistant Professor, Department of Bank Management, Annadesh College for Women, Chennai. Today I would like to present the concept of environmental accounting. My hope is that by the end of this session, you have a clear idea about environmental accounting. Environmental accounting is an essential tool for understanding the role played by the natural environment in the economy. Here, the environmental accounts provides data which highlight both the contribution of natural resources to economic well-being and the cost imposed by the pollution or resource degradation. Environmental accounting target is to incorporate both the economic and environmental information. Environmental accounting is a field that identifies resource uses, measures, and communicates cost of a company's or national economic impact on the environment. Environmental cost, which includes cost to clean up, remediate contaminated sites, environmental fines, penalties, and taxes, purchase of pollution prevention technologies, waste management cost. Environmental accounting is also called as green accounting, resource accounting, integrated economic and environmental accounting. Environmental accounting process consists of environmentally differentiated conventional accounting and ecological accounting. Environmentally differentiated conventional accounting measures the effects of the natural environment on a company in monetary terms. Ecological accounting measures the influence a company has on the environment but in physical measurements. The objectives of environmental accounting is segregation and elaboration of all environment related flows and stocks of traditional accounts. The objective of this segregation is to identify that part of the GDP, that is gross domestic product, that reflects the cost necessary to compensate for the negative impacts of economic growth. The second objective, linkage of physical resource accounts with monetary environmental accounts. Physical resource accounts covers the total stock or reserves of natural resources and changes therein even if those resources are not affected by the economic system. Accounting for maintenance of tangible wealth is a third objective of environmental accounting. Here, SEEA, System Integrated Environmental Accounting, extends the concept of capital to cover not only the human made but also the natural capital. Capital formation is correspondingly changed into capital accumulation, which allows for the use or consumption and discovery of environmental assets. Depletion cost of natural resources and the changes in environment quality only permits the calculation of EDP. EDP abbreviation is environmentally adjusted net domestic product. The functions of environmental accounting. The functions that will be deviated into internal functions and external functions. Internal functions are carried out within a company. It makes it possible to manage environmental conservation cost, to analyze the cost of environmental conservation activities versus benefits obtained, to promote effective and efficient environmental conservation activities through suitable decision making. External functions are effective in conveying information about the company's environmental activities to stakeholders. Therefore, environmental accounts not only fulfills a company's accountability but also facilitates the attaining the corporate assessment. The external functions allows a company to influence the decision making of the stakeholders like consumers, business partners, local resident, and administration. The subfields of environmental accounting are global environmental accounting, national environmental accounting, corporate environmental accounting. Global environmental accounting is an accounting methodology. It deals with areas which includes energetics, ecology, and economics at worldwide level. National environmental accounting is an accounting approach that deals with economics on a country's level. Corporate environmental accounting focuses only on the cost structure and environmental performance of a company. Corporate environmental accounting divided into two parts. Number one, environmental management accounting. Number two, environmental financial accounting. Environmental management accounting. Environmental management accounting addresses the management information needs of managers for corporate activities that affect the environment as well as the environment related impacts on the organization. Here the impacts could be production effluent, recycling, water and power consumption. EMA is defined as the identification, collection, analysis and use of two types of information for internal decision making. The framework integrates two major components, that is PEMA and then MEMA. PEMA, Physical Environmental Management Accounting, that is physical information on the use, flows and rates of energy, water and materials. MEMA, Monetary Environmental Management Accounting, monetary information on environmental related cost, earnings and savings. The management information in EMA are to identify and estimate the cost of environmental related activities, to identify and monitor the use and cost of the resources like water, electricity and fuel, to make sure that environmental consideration is a firm part of the capital investment decisions, to assess the impact of environmental risks, to include the environment related indicators as a part of routine performance monitoring, and also benchmarking activities against the environmental best practices. The environmental cost in EMA. The environmental costs which are connected with the actual or potential deterioration of natural assets due to economic activities. It can be categorized into prevention cost, appraisal cost, internal failure cost, external failure cost. Prevention cost is a cost which are associated with preventing adverse environmental impacts. Appraisal cost is a cost which assessing the compliance with environmental policies. Internal failure cost is a cost which eliminates environmental impacts that have been created by the organizations. External failure cost is a cost which incurred after environmental damage has been caused outside the organization. The benefits of EMA practices. The benefits are: number one, improving sales or reducing sales erosion. Here the consumer awareness of products and services environmental impact is increasingly influencing their preferences and buying behavior. Number two, reducing cost. Reducing wasteful consumption of input resources has a positive impact on reducing cost. Also, improvements to processes can bear down on the cost. Number three, reducing the cost of failure. Investing in processes that reduce the likelihood and cost impact of failures, such as the need to process waste or clean up environmental impacts. Number four, improving the image of the organization. This can enable it to attract better talent, reduce talent attrition, and can change higher prices. Environmental financial accounting. Environmental Financial Accounting, that is EFA. It deals with accounting for and reporting on environmental transactions and events that affect or likely to affect the financial position of an enterprises. The challenges of EFA are: number one, environmental cost and liabilities are accounted for by the following relevant accounting standards or in their absence, generally accepted accounting practices. Number two, meaningful disclosure of the environmental performance of an enterprise is provided. EFA for the challenges to ensure that appropriate management accounting procedures are, where necessary, developed and used. For example, cost out pollution controls and recycling alternative investigations. Methodology of environmental accounting. The system of environmental economic accounting, already I said SEEA, is the accepted international standard for environmental economic accounting, providing a framework for organizing and presenting statistics on the environment and its relationship with the economy. It compares the environmental issues to the general economic, knowing that the comparisons are based on the same entities. SEEA grows out the system of national accounts, and it is a framework to compile statistics linking environmental statistics to the economic statistics. It contains internationally agreed standard concepts alone only. For example, pollution levels caused by the producing industry can be linked to the specific economics of that industry. It integrates economic and environmental data to provide a more comprehensive and multi-purpose view of the interrelationship between the economy and the environment and the stocks and changes in stocks of the environmental assets. SEEA is essential to show different pattern of sustainability for production and consumption. Role of environmental accountant. Environmental accountant have a direct interest in controlling and reducing business cost and increasing profits. The role is promoting sustainability, reporting, verification, standards of reporting, taxation, small and medium industries, externalities, legislation. Sustainability. Once you accept that the accountants have a role as a businessman, they have a role in sustainable development. It is the only way of demonstrating that accountability and transparency of the company's operation. Accountants are the verifiers of sustainability reports. Accounting profession has standards to ensure the quality of a sustainability reports. Accountants should provide tax advice in this area. They can also provide advice on energy use for small and medium industries. To avoid externalities, the companies are advised to invest in pollution control technology. The way to get companies to move in the direction of continual investment is by progressively tightening the legislation. Environmental accountant may create, tweak or document all customs accounting practices and systems for their company to accomplish. They are highly responsible for external reporting. They document the economic flows and their cost. Environmental accountant skills are very essential for the environmental accounting. His skills and experience to monitor, measure and control cost, to manage information systems so that the outputs are accurate and reliable, to identify and plan financial budgets for improvement projects, to help formulation and implementation in strategy, to provide highly regarded advice. The environmental accountant skills particularly in the field of costing and investment appraisal of projects. Costing here means He is very keen in allocation of environmental cost of products and services. He also should ensure the relevant environmental cost in project appraisal. Environmental accountants involving in three types of accounting: managerial accounting, financial accounting, and national accounting. Managerial accounting make decision about purchasing capital investments, product design, and compliance and strategies. Financial accounting is responsible to make report on company's environmental cost and liabilities to investors and lenders, and also follow the generally accepted accounting principles, that is GAAP. National accounting is only the accounting for a country's natural resources, which includes national supplies of resources like oil and timber. Responsibilities of EA. Environmental accountant responsibility is to analyze and interpret data from various reviews of literatures. He should analyze the historical data and to also to formulate a reasonable value for present actions. He should analyze the ecological and financial trends and cycles which is for future trends. He should explain how the environmental event may impact of company's balance sheet. He should create and evaluate the several hypotheses in the face of adversity. He should communicate very clearly with the stakeholders on financial performance and also make strategic decisions. He should prepare the report in very clear manner and also perform accounting actions and also assess and assign financial value to a company's task, strategies, and past and future impacts as well as the profits. The significance of EA are: number one, meeting the regulatory requirements and cleaning up of pollution that already exists and properly disposing of the hazardous material. Disclosing to the investors both potential, current, the amount, and the nature of the preventive measures taken by the management, and also operating in a way that those environmental damages does not occur, and promoting a company having wide environmental attitude, and also control over the operational and material efficiency gains driven by the competitive global market, control over increases in cost for raw materials, waste management, and potential liabilities. The major issues in EA. The major issues are: number one, there is no standard accounting method in environmental accounting. The high input for EA is not easily available because cost and benefits relevant to the environment are not easily measurable. And also comparison between two firms or countries is not possible if method of accounting is different, which is quite obvious. Many organizations significantly underestimate the cost of poor environment performance to their organization, that is improper track of all their resources. It mainly considers the cost internal to the company and excludes cost to the society. And it is a long-term process, hence drawing conclusion with its help is not easy. EA cannot work independently, therefore it should be integrated with financial accounting, which is not easy. Conclusion: environmental accounting is very preparatory stage in India, and it is essential for the environmental management but also for the routine management activities like planning of process of products, allocation and control of cost, capital budgeting, supply process, price policies, performance and evaluation. This accounting provides the sustainable development of an economic entity's activity. Environmental accounting disclosure data is one of the key elements in an environmental report. It automatically enables those parties utilizing this information to get an understanding of the company's stance on environmental conservation and how it specifically deals with environmental issues. Today, an increasing number of companies and other organizations are engaging in environmental management as a part of their management strategies to specify measures for dealing with environmental issues and to internally carry out the environmental conservation activities. Hence, environmental accounting is a tool to supplement environmental management and also supporting rational decision making for the organization. The benefits determined by the impact of the environment upon the activity and the development of practices and policies on pollution control, choosing the materials that ensure cost maximization and looking for possible recycling alternatives. Disclosure of environmental accounting information is the only key process in performing accountability. Thank you, one and all.